Hey traders, welcome back. When we are trying to identify high probability setups, we're also trying to predict the place on the chart where the high probability setup is going to appear. Now we're doing that by using trend lines. Trend line is one of the strongest key entry point in price action. And a lot of times, if we are going to draw the trend line, we can find the right fitting trend line at the very first try, and it will offer us setups throughout the entire day. But sometimes, like today, there are multiple options for trend lines to be drawn, and you have to keep readjusting the trend line as the price action keeps developing. And the first and the easiest thing we can do is we can identify what is the bias. Because if you keep the proper bias in the back of your mind, you will be able to stay on the right side of the market and you will be able to take a high probability setups. So let's talk about what was the bias today before the market opened. We can see that we started with the bullish uptrend. Price was creating a series of higher lows and higher highs. Exponential moving average was pointing up slightly, and we had a first break for the uptrend. So according to trendline rules, I expect for price to create a new extreme after break, but that didn't happen. Bias changed swiftly and price kept continuing working lower. Now, where is the point in price action? When do we stop looking for price to create a new extreme of the uptrend? I'm going to take a look how strong this downtrend is and how far it has moved and how much of the previous uptrend it retraced. And by the time price is already down here, I can see that almost the entire uptrend is retraced, and this is enough information for me to change the bias and to stop looking for price to create new extreme to the upside. And I expect for price to create new extreme of this downtrend working lower, because this is now the most recent bias. The bias is bearish. So there's a break of a trend line. I expect for price to create new low, but this is just a first entry short. This is not a high probability setup, even though it is at the key entry point at the exponential moving average, and I expect new low. First entry is not a high probability setup. Market likes to move in pairs of twos, and high probability setup would be a second entry. By the time second entry forms, it's already way too down here, far away from EMA, and I cannot take this entry. This low is still higher than this, so we don't have a new low yet. We still can expect for price to create a second leg to a new extreme. And you guys can see we have a new low, first entry short, pullback, second entry short. And can you see the difference between these setups? Now this is a second entry short. This was just a first entry. It is a nice bearish bar, ticked higher, reverse down, and it is still at the exponential moving average. So this is the two-legged pullback high probability setup with the proper market context, and the bias is what? Bias is still bearish. Now I didn't take this trade myself because I didn't manage to have the trend line in play at the time. My trend line was like this, and I found it after price pushed down like this. Now, when I saw this trend line right here, this bias right now is bearish. This downtrend is in play, and we're just looking for two-legged pullbacks at the key entry points. There's a new low form, and each new low is still lower than the previous one. Each new high is lower than the previous one. So this is a good confirmation that we are in the bearish structure. Trend line is fitting nicely, and we have a first entry short, and we only have a first entry short because there is no trigger higher that will reverse down. So this is kind of like a hidden second entry. We can tell that it acted as a second entry, but since there is a no tick higher above this bar right here, price just reversed down, so you cannot take this entry. I don't like taking this entry. You cannot even take it on engulfing because there was no trigger higher, so you just have to watch this go without you. Even though it is at two key entry points, there is just no setup price action wise. Price kept creating a series of lower highs, lower lows. We have a new low form, and we have a first entry short, pullback, second entry short, and this was my first trade for the day. Now this trade is quite aggressive because it is quite close to these lows, but take a look what happened. Price broke the micro uptrend. I'm drawing the short and trend lines because I want to follow the trend line rule the same way as I'm trying to follow the trend line rule for the bigger patterns. So there was a break for this uptrend, new extreme form, and on the same bar quickly reversed back down. So this is a good sign when you have a break and retrace back down on the same bar. Price tested the EMA, reversed down, and this was such a strong bearish momentum. Take a look how the bar is full and it's closing on its very low. I took this for 7 ticks, and price worked even for a little bit more, and then it pushed higher. So by this time, the bias is still bearish, and this is still a pretty easy market to follow. We have a new low, we have a first entry short, pullback higher, second entry short. Now I mark this entry only as an example because this second entry short is way too big and is way too close to these lows. You cannot take this entry. The only reason why I marked it is because next time in the future you will see this setup. It may be a little bit smaller, it may be easier to enter, and you will be able to identify the structure because This is the first break for this downtrend, and the new low was formed. And you expect for price to create new low. So according to price action rules, you expect new low and the bias is still bearish, and this is already way too big, so you cannot enter right here. The market keeps working lower. So now that you have a new low, you expect correction or straight up reversal. You can see that you have a new low, first entry short, pullback, second entry short. But this second entry short is not good to take. Why? Because you have a break new low, so you expect correction, and you have a congestion. 1, 2, 3, 4, 5 bars stacked. EMA is getting in the middle of these bars. Take a look how EMA was pointing down, and now it's starting to flatten. It's exactly in the middle of these bars. And there was additional way to enter this second entry short, to enter this congestion once it broke lower, pullbacks. There's a breakout pullback into this congestion, tested the key entry point, tested the EMA, and it quickly reversed down, lower high. Now this is a similar situation of what happened right here. I marked it because I tried to enter this myself using a limit order, basically once it ticked high, reverse down as an engulfing entry, but it happened too fast and price reversed down too quickly, and by the time you're way close to these lows, you cannot take it because you have almost no room to here. This only could have been entered on engulfing, and the engulfing is safe because you're below EMA. You're not above EMA like here, you're below EMA right here. So this is a great lower high confirmation of this second entry, but it's already way too low. And now the structure and the bias is changing a little bit. We're no longer pointing down, the EMA is flattening, we have move down, move up, move down, move up. So this is right now a trading range, small one, but the overall bias is still bearish because we traded down into trading range. So the way you trade into trading range, you generally expect for price to break in that direction. So this was a downtrend structure the entire morning. So this is still, I'm leaning more towards a bearish structure. And there was also the option to draw a trend line that would fit like this, spike and a channel without the break, and this fits really well as well. I was playing the little bit shorter term one with the break and a new low, but you guys can see this basically gets you to the same place, but you mainly focus on the bias. You don't have to be perfect in price action. That's the great thing about trading. You don't have to be perfect every single time, but if you keep the proper bias in the back of your mind, you will still keep taking short entries. So I'm going to delete this. It doesn't really matter which trend line you use. They both get you to the same place. You guys can see that the price pushed higher. We have a failed breakout above this trading range. So expect for price to pull back into trading range. I want to talk about this setup right here because I saw a few traders took it because they took it as a failed second entry short. But this setup right here broke out of a trading range. And this was a big bearish bar which confirmed the bearish momentum. So you never want to be necessarily buying right after such a big bearish bar, but there was no trigger above this bullish bar right here. So that means that there was no trigger. The failed second entry short never triggered here, then it stalled, created a bearish bar, and now it's telling you something. If this is going to be a trap, which a failed second entry short should be a trap, it was supposed to act quickly right after it formed, and the fact that it never triggered and it stalled, that is telling you something about the momentum. That is telling you that this trading range may be valid and the overall bias is down. So you're supposed to be sticking with the sells. If anything, you're not supposed to be trying to go long just yet. So I don't think taking this first entry long is a good idea, and price quickly pushed down and there was no way to enter on board with shorts. This entire time, the bias is still quite bearish. Even though we have another break, another new low, you can tell that the entire morning price kept pushing to the downside. And this is one of those examples where you keep constantly pushing lower and lower, and there are probably bigger patterns that are developing. So when I saw this is where I extended my trend line like this, and this is what I was looking at. You guys can see there was another break, another new low, and there was even a bigger trend line. So today was quite confusing finding the proper trend line, what is the bigger pattern. But if you just get the bias right, if you're not trying to counter trend trade too early, remember, you need to get proven trade in the opposite direction. This is a proven trend in the opposite direction, and this is how you know that you can be looking for longs, not these very short-term corrections while they're still part of the bigger downtrend. So once the price is pushing lower, there's a new low, first entry short, second entry short, but the uptrend is still in play. It's not a great entry, and you just came from the very bottom of this trend line. So you probably expect for price to correct for a little bit longer time and to possibly get to these highs right here. But mainly the uptrend is in play, and take a look how exhaustive this move was. Break, new low, you're at the very bottom. So you expect for price to definitely correct for a little bit longer. You guys can see, not necessarily you don't want to go long. It was tempting. I was playing with the idea of going long here, but when I zoomed out and I reminded myself the bias, I knew that I would be trying to go long too early and the bias is just too bearish for me to go short. But take a look what happened. Price pushed strongly below EMA, it pulled back, tested the key entry point, and it reversed down. This is a lower high off the key entry point, and it was my second trade for the day. This was the very quick and easy scalp. I think I used limit order 1 tick back and resulted in a quick easy scalp. The market created double bottom, strong bullish bar rejection, and a strong reversal up. Now when I was watching this, I was expecting for this trend line to hold and for price to continue pushing lower. It never did. Market broke the trend line, price corrected. We are working in this training range, move up, move down, move up, and EMA is starting to get flat. So right now this is mainly a trading range, so we're going to be drawing the short-term trend lines. There's a two-legged pullback right here, but it never really triggered correctly. By the time second entry long trigger, it triggered above bearish bar, so you don't want to go long here. Then it triggered above this bullish bar. By this time EMA is getting flat in the middle of these bars, so I don't think you want to go long here. I don't see any decent entry. There's no good entry right here. There's a second entry long, but there's really no great entry. Then you have a new high, first entry long, pullback, second entry long, failure, and price keeps pushing lower. You expect for price to create new low, and this was a tricky setup because by this time you have a break and a new low, so you would be expecting correction for at least a little bit, not necessarily a reversal after such a strong bearish move down. And you guys can see this is clearly a strong bearish downtrend, but we have a clear 2 legs up. We have a break of an uptrend, new high form, we have a first leg up, pullback, second leg up, and this is a clear 2-legged pullback. Looking back, it's not a bad setup by any means. The signal bar is great, but I don't like how we first broke strongly above EMA. A lot of times I got trapped like that lately when you really strongly push above EMA and you close right at the EMA. You really didn't manage to push strongly lower, but see, because I have a break and new low, I was really expecting a little bit of a longer correction, bigger correction. But looking back, this wasn't a bad trade because what ended up being, there ended up being a bigger channel in play like this, because by this time, the downtrend is quite strong because this bullish move up didn't manage to push above this trading range. We basically pushed down, consolidated, and resumed the downtrend. So the overall structure is very bearish. So this is not a bad entry. I just think it is very hard to find this entry in real time. But this is not a bad entry by any means. I'm almost marking it. Market is pushing lower, structure and the bias is clearly bearish, and there's a new low. First entry short, second entry short, take it higher, it's a little reverse down. You put your limit order in place, you put your stop loss above this bar 1 tick, great bearish bar, quick easy scalp. I didn't take this trade myself because I was done with those 2 trades. Market created move up, created another second entry short, but it triggered above this horrible bar above EMA. If I want to sell below bar like this, not below bar like this, and above EMA as well. I don't see any good entry. Then you have an uptrend working higher. Can we go long here? No, we cannot go long just yet. It is just too early to take reversal pattern just yet. The overall bias is still down. All right. And even though I can be playing the previous downtrend like this, since you break, new low, another break, another new low, you keep pushing to new extremes. So this is really telling you that there's still a bearish structure in place, so I cannot go long just yet. If anything, I'm looking for price to give me a failed second entry long after break and a new high of the uptrend. You have a new high, first entry long, pullback, second entry long, failure, great big bearish bar, you close below EMA, but by this time EMA got flat, it's completely in the middle of these bars. I don't really like going short in this congestion, but you guys can see there's some resistance forming at the top. And this is a great trap. A lot of people probably pick long too early before the price proof that the market is working to the upside. This is not a trading range where you can take a reversal pattern. This is a bearish downtrend. So you only want to start going long after you get a proven trend in the opposite direction. You never want to start going long too early. So this was an almost great entry. And honestly, I could easily mark it because it is quite aggressive. It's not such a bad entry because the signal bar is really great. Then the market created another second entry short, but a similar story. EMA completely flat in the middle of these bars. You're already pushing above EMA, and mainly how the EMA is in the middle of these bars is getting stacked. Market continue pushing higher and now strongly push higher. This was quite surprising. I was expecting for price to retest the new extreme of this bigger downtrend working lower. It never happened. I thought we may eventually get a new low, but market strongly reversed up. But you have to trade the price action you have, not the price action you want. So once you see such a strong bullish move up, you have to adapt to the structure. You have a new high, first entry long, pullback, second entry long. So this is a two-legged pullback at the key entry point, downtrend played out with the break and a new low, big bullish bar, high probability setup with the direction of a trend. I still keep in back of my mind that we can potentially get a new low, but right now I cannot deny how strong this bullish move up is. We completely ignore the trend line and it's very strong. EMA is pointing up. So right now, temporarily I'm playing the bullish bias because this is now a proven trend in the opposite direction, and this is where I know that I can go long here. Price kept pushing higher, first break for the uptrend. So according to trend line rule, I expect for price to create the break and a new extreme, and you have a two-legged pullback, second entry long at the key entry point. Price created two legs to a new extreme and it reversed. Perfect price action rule. Market corrected. There is no good reversal pattern just yet. Pullback, first entry long only. Then you have a second entry long failure, but it's above the EMA. Reversal pattern needs to form below EMA. Market confirmed the downtrend with the third confirmation right here, and it also ended up being a second entry short at two key entry points, not just one, but two. EMA and the trend line, they both keep holding at the same time. New low form, micro double bottom. I can reset the count. First entry short, second entry short. Look at this reversal pin bar, break, new high for the uptrend, indicating that the buyers are no longer in control, and I'm safe to sell at two key entry points. High probability setup. Market created a break, attempt for a new extreme, triple bottom was enough, and market eventually reversed and traded up working higher. All right, so today was a little bit difficult when it comes to trend lines, but you don't really need to be perfect. You don't need to find the perfect trend line. You just can follow the bias. And if you're patient enough for price to get to places where you're confident that you're reading it correctly, you will be rewarded. I only took 2 trades per day, and that's all you need. I took this trade right here, like I mentioned, second entry short, and this trade right here, the lower high. I didn't take any other entry, but you don't need much. You don't need other entries. 2 trades per day, it's all you need, and you can wrap up and go and enjoy your week. So these 2 trades for me, and there were a couple of decent setups later on, but you don't really want to push your luck during Friday. I'm gonna wrap it up. I'm gonna see you guys in the next one. Take care, everybody.